Let's get back to the SAC Capital story of the day. Your reaction to the indictment alleging that SAC Capital engaged in a pattern of insider trading that the government says went unchecked for over a decade.
Mark, it's some of the strongest language I've heard prosecutors use in the last 10 to 15 years. They've really seemed to have it out for Stephen Cohn and specifically his firm. It appears as though they're not going to be able to get a criminal indictment against Stephen Cohn, but I think the next best thing for them is indicting SAC, and I think that will cause eventually SAC to close down. And I think for prosecutors, that's a real feather in their cap. You have allegations going all the way back to 1999. It's a long-term systemic fraud that they've alleged against SAC.
Andrew, as you mentioned, Stephen Cohen, he was not named as a defendant, but in court papers, prosecutors say he, quote, enabled and promoted the insider trading scheme by ignoring indications that trading recommendations were based on inside information, end quote. From a legal standpoint, what's the difference?
Well, I think the big difference is that they really are focusing their guns, even though they didn't name him in the actual indictment. I think they're really focusing in on the environment at SAC, the lack of compliance, the lack of internal controls. And I think they've set the compliance infrastructure of SAC up as the ultimate fall guy. And I think that this indictment, they're going to be able to do that. Because, Mark, if you think about it, there have already been 6 employees at SAC who've been criminally charged. There are 2 more that end up going on trial sometime in November.
Right.
And for a 1,000-person corporation to have 6 people, basically pleading guilty to one of the most serious crimes that someone in the securities industry can engage in, that's absolutely incredible.
Well, the Manhattan U.S. Attorney, Preet Bharara, says the government isn't trying to force SAC Capital advisors to close, but won't crippling the hedge fund financially by seeking forfeiture of what prosecutors say any and all assets end up doing just that. And what about third-party investors? What does this mean for them?
I think SAC is functionally dead because of the agreements that they have with their trading partners. To the extent there's a criminal indictment, which there was today, that gives them certain rights, certain obligations. And if you think about it, what trading partner wants to be affiliated with a company that's under criminal indictment? I think it's going to be really hard for SAC to continue. I do think what will happen is Mr. Cohn will continue to manage his own money, maybe the money of some of the employees, but in terms of public money, other investors, I think he's done with respect to that.
So the reputational damage, if nothing else, has crippled this firm?
I would say this firm, and if you think about it, the last 6 to 12 months have been absolutely horrible for hedge funds in general.
Yeah.
Right now you have the Paulson hedge fund in the news for the fabulous Fab trial. You have a number of hedge funds getting absolutely hammered on gold bets. You have SAC in the news virtually every day. It hasn't been a good 6 months for hedge funds.
Andrew, our Bloomberg View columnist Jonathan Weil, he wrote the following today. The Justice Department will need to clearly explain once and for all how it justifies giving deferred prosecution or non-prosecution agreements to large financial institutions, but not SAC Capital, especially when it couldn't find a criminal case to bring against its owner, end quote. Why give agreements to JP Morgan Chase, UBS, and Deutsche Bank, but not SAC Capital?
Just a great question. I mean, I've had a problem with those deferred prosecution agreements for a long time, and it does seem that the Department of Justice really kind of plays favorites, and they decide who does or doesn't get a deferred prosecution agreement, and it's absolutely stunning. I think those things are frequently abused. I think it calls for second guessing and a lot of head scratching. I don't know the answer to it, Mark. It's a great question.
Since Stephen Cohen started his hedge fund, he achieved average annual returns of 30%. In retrospect, should those returns have raised red flags? Were they just too good to be true?
Yeah, I think that was the initial thing that set prosecutors and then called the NASD, now called FINRA. I think that's what initially set them off. They had something like 100 different trades shortly before good news or bad news was released. And SAC was consistently getting out of stocks right before bad information or into stocks right before good information. And that's a major red flag. And I think that really caused prosecutors to focus in on them like a laser beam. And I'll tell you something else, Mark. A big problem for Stephen Cohn, it's almost like he poked the bear with respect to the prosecutors. When you're under investigation, what you don't do is you don't buy a $150 million painting. You don't buy a $60 million home, in the Hamptons. You just don't do it. There's a certain level of arrogance that Mr. Cohn has had that I think did not help him in this investigation.